Interesting just standing at the back listening to the guys chatting. Yeah, I've got a bit of a story, and my story involves regional properties, and I've got some negatively geared and some positively geared, and so I've sort of done that whole gamut. And it all started really basically from being in the room where you guys are right now, actually. So it was interesting because I came on board with Real Wealth a few years ago now, probably about 2016, I think it was. And it was as a result of being in a really terrible financial position. So we had, my partner and I had some really terrible, catastrophic financial things that happened in life. We made some really terrible, really shockingly bad decisions and lost, huge amounts of money. So, at that point in time, we were, sitting there thinking, how on earth do we, get out of this? How do we move forward? How do we even, what's going to become of us? We're going to live in a caravan. We're going to be, it was pretty bad. So we had a shop in Melbourne, which went broke. We thought we were doing the right thing at the time, buying a franchise. It was going to be great. It was very exciting, and we just lost about $500,000 on that. And we'd had a few other things. Previously, if we go back, right back, we were both with Ansett at the time, when we both when Ansett went under, so we both lost our jobs at the same time, and all our superannuation. Everything had been going really well at the start. We bought a house and we had an investment property, and then we had to sell all of that stuff when Ansett went under. So we were sort of back to square one. And then we were going along all right. We bought some. One good thing that happened out of Ansett, I have to say, was when we sold our house, which we were forced to sell. We actually doubled our money on that in about 18 months. So at the end of that whole process, it was like, okay, well, that happened, and that was actually not a bad thing, and we had some money, so we sort of parked it into a fairly big regional property, a big regional block of land, and then we went overseas and worked overseas for a while. And then we came back and we started up this shop. It lost us a great, enormous amount of money, as I just said, and so we were sitting there thinking, well, how do we, where do I go, what do I do? I don't even know where to start, where to begin. And I came on board with Real Wealth. I was a little bit sceptical and a little bit suspicious, and a bit, didn't know who. When you get to that sort of position, you don't know who you can trust or who you can't trust, and what decision you make next. Are they going to be right or wrong, or anything in between? And it was, I don't know. It was an emotional time. It was a tough time. I don't know if anyone's been through a terrible sort of financial loss in the room, but it's not a pleasant place to be when you've had assets and had things and had money, and it all gets stripped away.
So, Chris, you were waiting for the steak nights. Jason, sorry, yeah, you were waiting for the steak nights.
We were waiting for the steak nights, and I looked at a few people that sort of ran these sort of courses, and I thought, well, these guys are just in Greensboro. I'm going to sort of front up and go and have a look, and arrived at the doorstep and went in and sort of went, well, I just want to know who you are, what you do, and before I invest any money in you, because I've lost that bloody much of it, I want to make sure we sort of do the right thing next. So it was interesting, and the guys took me and said, yeah, come in, have a coffee, we'll tell you what we do, and we sort of went from there. I met Cheryl Bedford as part of the, Cheryl was one of the members of the team who was really, gave me a lot of confidence at the time. She said to me, Jason, you know what, just relax, take a breath. What we're going to just do is make sure the very first property that you buy is going to be a good cash flow positive property. That's all you need to do. Just get the first one right, and then we'll go from there. Then I met David and the team at Blue Ink, and David said, I'm going to set you up so that we finance you for the second, third, fourth, fifth, and so on. And I remember just thinking, oh man, like 4, 5, 6 properties, like, I just couldn't understand how we're ever going to get to that sort of position. And it was, I remember leaving that sort of meeting just thinking, I don't know if this guy's delusional or
some days he is.
I just thought it just couldn't happen for us because we had so much terrible sort of bad luck. But as it turned out, we did move forward. We ended up buying a really good little regional property. We bought that property. We got a building report on it. It showed a few things. We were able to renegotiate the price downwards before we sort of signed off on that. So we did all of the things that I've been listening to, you talked about this morning. Bought that property, renovated it a very minor cosmetic reno straight up. So we just went straight in with carpets and painting. I think Karen came past that day. We were out there, and she rocked up and said, "What are you guys doing?" We're all covered in paint, and was like, "Oh God, I don't know. I still don't know what I'm doing." But anyway, we moved forward with that, and that property ended up putting us, it was about $100 a week cash flow positive, that little property. So we've still got it. It's a little 2-bedroom house in a regional area, and it's been a good little property. It actually earns us a little bit more than that now, and that sort of has been a really good counterbalance for a couple of the other ones that that don't work that way. So then we sort of moved forward. We released some equity. We bought another one in a bit of a growth area. That property's seen enormous growth. That was the second property we bought. I bought it at auction. Karen says not to do that, but bought it at auction. We sort of worked with David. We had a bit of an idea about what we were going to be able to get it for and what we were hoping to get it for. It was still a shock on the day when we purchased that property. I remember texting David saying, well, it started with an F. We bought it, and sort of dumped that hot potato in his lap and said, "You get the finance over the line." And then that property we paid $375 for, and a house in that street sold just in the last couple of months for about $720, and so that's been a ripper little property as well. So. And we bought a couple of those, and we sort of stepped up in terms of price points along the way. There's been some great results and some not so great results, but that's just how it goes. I think if you look at your portfolio as a whole, there's great parts of it and there's some not so great. You either hang on to those or flip them or whatever you want to do. But it's been a really interesting journey. The guys here have been so helpful. I just and even. You get to the point where you feel exasperated sometimes. I remember ringing up Kathy one day, just completely exasperated on the phone, just trying to get this finance stuff over the line. It wasn't happening. We were getting a runaround from valuers, and they were sort of telling us one thing and driving by the property or doing it at their desk in their office. And I remember, yelling on the phone with Kathy, and not on a personal level, but just out of frustration. Kathy was just like, "Okay, are you finished? Take a breath." Been there, done that. Got X amount of properties of my own. I know how hard this is. We just have to keep, following the process. We'll take one step at a time and we'll get it over the line. But I think on that deal, we ended up being late for settlement. I think we were late a couple of weeks. We went over, and and I kind of remember at that time thinking, "Oh God, we're not going to settle. We're not going to settle. This is the worst thing in the world." But it wasn't. Just happened, and we were late settling. Sorry about that. We're late settling. Deal with it, And we settled it, and we got charged a little bit of penalty interest, but so what? I look back now at that property, it's probably increased in value by about $200,000 or $300,000, and it was just like, now I think, just bad luck, it was a bit of inconvenience for the people that were looking to move out, but that's how it went. So, it's I think, as part of the journey, you just have to sort of push on with this, and it's just amazing what you can achieve, I think, when you get your mindset right. That's a big part of it. When I came on board, I think I was just so down in the dumps. So, I knew what I wanted to achieve. I knew where I wanted to go, but I just had no idea how on earth I could possibly, get to a point where we could achieve that. And we've, since working with the guys, Helen and Ed and David, Kathy, everyone, Karen, Mayo, everyone's been really more than encouraging. I think that's the crux of it, and it really helped me just turn around my mindset.
So, can you tell us when you started, the year, and how many properties you've got now, Jason?
So I think we started when I came on board, was it about, I'm just trying to think what year it was now. I think we bought the first one, the first purchase was about 2016. Prior to that, I'd been with Real Wealth for a little bit of time, but I actually, when we sort of went through the process of doing my initial finance, I couldn't get finance. So so let me tell you a little story. So when we lost the shop in Melbourne, I only had a mortgage on my house of about $250,000. So I was kind of excited about that, because I sort of thought, I had this house that I knew was worth about, $750, and I only owed $250 on it. And then suddenly the bank went, well, we're selling your house. So I didn't know where I was going to head and what was going to happen. And I'd had a letter in my hand from the bank saying, you have to have, we demand that the house is listed for sale in the next 30 days and that you secure a sale 30 days after that with settlement 90 days after that, or you'll be turfed out. So I was in a huge panic about all this, and eventually I rang the lady at the bank, actually. I probably never told him like this, but I actually sort of rang her to give her a bit of a mouthful, basically, because I said to her, when I went for this loan, you originally told me, don't worry, if the business goes under, we'll just roll these loans in together and nothing will ever happen, you can't lose your house. Some things changed in the banking industry, and that no longer became, a thing that you could do. And I remember just out of exasperation, just thinking, I'm just going to ring her and just tell her that, you've just stuffed up my life, because now the bank's going to take the house. And anyway, she wasn't there. She wasn't there. And this old bloke answered the phone. I thought he was old, probably only my age, probably only 50. He said to me, what's happened? Tell me the story. And I told him the story. And he said, look, Jason, I said, look, years ago in the bank, we used to try and help people. I'd like to try and help you. And anyway, so that all panned out well. And eventually what they did was they added, I'm digressing, but they added the loan from our business, which had failed, to my mortgage. So suddenly I went from having a $250,000 mortgage to almost $800,000. So I was kind of sitting there thinking, just getting worse. How am I ever going to pay all this off? But as time went by, we had the house revalued and released a bit of equity out of it, a tiny bit, to buy that first little house, and then eventually last year we sold that house. We sold our principal place of residence, and that was one of the things that was suggested to me. And I remember thinking, no, we built this house on this block that we bought after we lost our jobs with Ansett. We can't sell it. We put all this blood, sweat, and tears in. We need to stay here. It's the emotional attachment to the house was too much, and eventually we decided on the market with what we felt was a ridiculous price, and we sold it pretty much straight away. So what that enabled us to do last year was buy another house, another property. We bought a property out near Wood End on 75 acres. It's a beautiful little location. And we don't have any mortgage on that house, so we bought that now. So that was sort of, whilst that wasn't a result of our property investing, it was a result of the mindset training, I think, that these guys helped us sort of get through. That the fact that, don't be so emotional, don't get too attached. It was just a property, it's just a house. And I think once you move all your furniture out, and that's all it actually really is. So we bought this house. We're now sort of unencumbered, and we've got 5 other investment properties now, and we've got a lot of equity in these properties as well. So we've got 4 of them are actually development sites. So I decided early on in my strategy, started out cash flow, and I remember buying that first little house thinking, well, this one gives me sort of $400 a month-ish. If I could just buy, 20 of these, and that was sort of my strategy at the time, and that was fine, and that still is fine if that's what, you want to do. But I just had an interest in sort of developing, and what I kind of decided was that, that was sort of something that I wanted to do. I've been working for a major Melbourne builder, so I knew about developing houses and building houses and that sort of stuff. And so I decided that was where I wanted to be. So those sort of little development sites, I've now got 3 of them, which we've just finished advertising on this week, which will get plans and permits approved for townhouses on all of them. Then I've got a decision to make whether I actually build them and develop them, and or sell them with plans and permits. So the options are endless, because you could build them and then they'll be actually quite cash flow positive developments. I could just hang on to them and perhaps borrow against them if I want to, or sell them with plans and permits in place and do that. But it's a pretty awful problem to have. But basically what I wanted to sort of talk about today was really, it's just about mindset. That was sort of the big thing for me, and also strategy. I got very hung up on my strategy at the start, and then one day Karen said to me, you can change your strategy. Doesn't have to stay. Each property can have a different strategy. Your strategy it's not locked in concrete for the rest of forever. So if you change your mind about the way that you want to head, then that's fine as well. As long as you do all the due diligence, do the numbers, make sure you do all the things that Helen's been talking about, it actually does work.